Okay, so this is for you if you're making money in your business, but you have no clue how much to actually pay yourself and you want to get your financial life all the way together. A lot of entrepreneurs don't even realize that if you get this wrong, you could actually be overpaying the IRS or setting yourself up for cash flow nightmares later. But don't worry, I've got you covered. Consider this the ultimate guide to pay yourself as a business owner in 2025 because let's be honest, I don't even know if the IRS will exist in 2026, so let's just take things one moment at a time, okay? By the end of this video, you'll know exactly how to pay yourself, avoid tax mistakes, and keep your business financially strong as of the laws in this country today. Hey there, I'm Jean Tony, your business finance coach and enrolled agent, helping service-based entrepreneurs make, manage, and multiply their cash flow. If you're ready to get your money right, tap that like button and let's dive in, all right? Let's start with the big question. How much should you actually pay yourself as a business owner? Now, if you're an LLC or a sole proprietor, you're using the Schedule C, when you file your taxes, you don't take a paycheck the way employees do, right? Instead, you take an owner's draw. If you have an S-Corp, you take a salary and something called a distribution. I'm going to talk about each one of those business types as I give you the 5 most common ways entrepreneurs can legally take money out of their business, okay? Let's start with option 1. Option 1 is random draws. Now, some entrepreneurs randomly move money from the business account to their personal account without setting limits to how much they withdraw because they're putting out one fire after the next, right? So if you ever checked your business bank account and you thought, wait, where did all my money go? Yeah, that might be the problem. When you don't set rules for yourself, you could accidentally drain your business, leaving you struggling to pay bills, including your taxes. So option 1 is random draws. And yeah, it's legal, but 10 out of 10, highly do not recommend. Option 2, some entrepreneurs take a profit percentage of their net profit. So your revenue minus expenses equals net profit, right? So let's say it's $5,000. You want to pay yourself 50%, so your paycheck would be $2,500. You've improved on option 1, but there's no rhyme or reason why you actually picked your percentage. I'm going to show you a way to take this up a notch in just a moment, okay? So that was option 2. Option 3 is also based on percentages. Now, some entrepreneurs find it helpful to follow the rule of thirds, which is another take on percentages, okay? Now, this time, you're putting all your money in your business account and allocating 1/3 of your revenue to pay yourself, 1/3 to taxes so you don't get blindsided in April, and 1/3 to cover expenses. Now, it's not perfect, but it's a simple guideline that you can easily follow that can keep your cash flow balanced so your business isn't running on fumes in the early stages and you're intentionally setting aside money for taxes. Now, option 4 is to pay yourself a reasonable salary and distribution, and this applies to S-Corp owners, okay? So option 4 applies to the S-Corp. So if your LLC is to be taxed as an S-Corp, the IRS requires you to pay yourself a salary. Why? Because as an S-Corp owner, you can take your business profits and split them into 2 money bags, okay? One money bag we're going to label salary. This is the amount that will be taxed 15.3% in payroll taxes. That's FICA and Medicare. The other money bag we're going to label distributions. Okay, so what's a distribution? Well, it's the money your business earns after expenses and payroll, your salary, that you can take home without paying payroll taxes on it. Now, I have to warn you right here. The IRS knows this tax benefit exists and they know how some of us can get down, okay? They want to make sure business owners don't abuse it by skipping payroll taxes altogether. So in this example, we're looking at a $100,000 bag, right? That's why they require you to split it up. A portion of it needs to be your reasonable salary based on industry standards, and the rest can be categorized as a distribution. That way, you're paying your fair share in taxes before taking distributions. In this example, if you put everything in your distribution money bag and you didn't pay yourself a salary, you could potentially save $15,300 in taxes. So, the translation, what does this all mean? You can't be making $500,000 and telling the IRS you only pay yourself $20,000, or making $100,000 and saying you only paid yourself $12,000. That's $1,000 a month for the entire year. They're not buying it, okay? They're watching, and if you pay yourself too little, they could hit you with penalties and back taxes. All right. Now, I said you need to pay yourself a reasonable salary. To find industry standards for salaries, check out sources like the Bureau of Labor Statistics, industry reports, job sites like Glassdoor or Indeed. Consult with industry peers or accountants. Now, of course, you can also ask ChatGPT. Here's a prompt. Can you help me determine the industry standard salary for insert your job title there, in the insert your industry in your location? I have X amount of years of experience, okay? And that would be a good starting point for you, okay? So the bottom line is, paying yourself correctly when you're being taxed as an S-Corp helps you save thousands in taxes while keeping you compliant and audit proof. Now, let's move on to option 5, which is my favorite approach. This is the profit first method. Now, instead of paying yourself randomly or waiting until you feel like you can afford it, profit first forces you to prioritize paying yourself first. It can be used if you're a sole proprietor, LLC, or S-Corp. It uses percentages like what I told you about in option 2 and option 3 with a twist to keep your business profitable, okay? Here's how. You're going to set up separate bank accounts for profit because your business should be making you money, owner's pay, taxes, and operating expenses to cover your business needs, all right? Now, 2 really good points about this process. Point number 1, this method ensures that you get paid while keeping enough money to run your business in dedicated accounts. You see the balances of these accounts grow every month, and you know exactly what the purpose of each account is, and it really makes you feel in control, okay? Point number 2, you're not just paying yourself a random percentage. You're paying yourself a percentage based on how much money your business is making. Now, I want you to check out the table on the screen. If the revenue your business is generating ranges from $0 to $250,000, the profit first method suggests that you allocate 50% of your revenue to owner's pay. So you pay 50% of whatever you're bringing in, okay? Because it's in the early stages. It's critical to reward your hustle, to keep your momentum going, but also keep money in your business. Now, as your business's revenue grows from $250,000 to $500,000, you can adjust that to 35%, allowing more funds for expenses and reinvestment. Now, your profit percentage goes down, but your revenue is going up. So I'm not suggesting that you pay yourself less, okay? Because your revenue is going up. So 35% of a larger number, do the math. And once you hit $500,000 to $1 million, you can consider allocating around 10% to your owner's pay. Your business is more mature, and most of your income is needed to sustain growth at that time. All right. Now, this structured approach helps you know exactly how much money you take home versus reinvesting in your business, keeping your cash flow balanced and your financial future secure. All right, so before we move on, I have something that will make this whole process way easier for you, okay? If you're tired of guessing how to manage your business finances, you need my free guide, How to Organize Your Business Finances and Build Long-Term Wealth. Inside, I break down a simple 3-step system to help you control your cash flow so you always know where your money is going, create a profit-first business that pays you, not just your expenses, and optimize with automation so managing your money becomes effortless. So just drop guide in the comments and I'll send it straight to you. Now, let's talk about what happens if you don't pay yourself the right way. If you don't pay yourself enough, you won't qualify for loans, mortgages, or even the right levels of business credit. Remember, if you're an S-Corp owner, the IRS expects you to take a reasonable salary. And if you don't, they could hit you with penalties for avoiding payroll taxes. Now, what happens if you're paying yourself too much? If you drain too much from your business, you'll run into cash flow problems, which means struggling to pay bills, taxes, or your team. Plus, if you're an S-Corp, overpaying yourself means paying more payroll taxes than necessary. And if you're not paying yourself at all, well, if your business is making money, but you're never paying yourself, what's the point? Right? You should be running a business, not a charity for your clients, which is what I did for a long time. Okay. So don't do that. Don't do that at all. What's the fix? Let's break it down. What's the most tax efficient way to pay yourself? Now, here's what works for different business structures, okay? The LLCs, remember the sole proprietor taxes, you're using your Schedule C, you're going to take an owner's draw. Since you're taxed as a pass-through entity, your business profit is automatically your income. The key here, remember, is to set a percentage of your salary using profit first. So example, if your business makes $10,000 a month, allocate 50% to owner's pay, 30% to expenses, 15% to taxes, 5% to profit. All right. S-Corps, you're going to take a salary plus distribution. Remember, the IRS wants you to take a reasonable salary based on your industry before pulling profit as distributions. The goal, keep your salary just right so you minimize self-employment taxes while staying IRS compliant. So the example here, if your business profits $200,000 a year, you might pay yourself a $70,000 salary based on your industry and then take the rest of that $200,000 as a distribution to lower your tax bill. All right. And now remember the profit first method, that's the most balanced strategy because with profit first, you never have to wonder, can I afford to pay myself? Your business stays cash flow healthy while you get consistent pay. And the bonus here is you'll always have money set aside for taxes, so there's no surprise in April, okay? Now, you know exactly how to pay yourself as a business owner without draining your cash flow or making costly tax mistakes, but paying yourself is just one piece of the puzzle. If you don't have a plan for managing your business finances as a whole, you're going to run into problems fast, okay? So as a reminder, if you want to take the guesswork out of managing your business finances, download my free guide, How to Organize Your Business Finances and Build Long-Term Wealth. The step-by-step system will help you master your cash flow, pay yourself with confidence, and build long-term wealth without the stress. So just click the link in the description or drop guide in the comments and I'll send it straight over to you. And if you find yourself in a situation where your income is skyrocketing because this is your winning season and you're worried about the tax bill that's coming, I highly recommend you check out this video to lower your tax bill and build wealth. Thank you so much for watching. I hope you will like, subscribe, and share this video with another entrepreneur who needs this information. See you in the next one.